The way the 9-member Justice Easwar Panel has taken the first step to simplify, if not clean up, direct tax laws. In its first batch of recommendations, the panel has suggested a few substantive changes to tax policy which can be addressed in the coming budget. The panel has also laid down a detailed roadmap on administrative measures which the government can take outside the budget for the ease of doing business. Here's the highlights of the first set of recommendations from the Easwar Panel.
The coming budget may provide serious relief on TDS provisions or tax deducted at source to small taxpayers. The Justice Easwar-led panel on simplification of direct tax laws has suggested an across-the-board hike in the TDS exemption limit accompanied by a cut in the TDS rates. For instance, on bank FTRs, the panel has suggested increasing the exemption limit to 15,000 rupees with a cut in the rate to 5%. Similarly, on interest income on securities, the panel has suggested increasing the exemption limit from the current 2,500 rupees to 15,000 with a drop in the rate from 10% to 5%. Similarly, for renters, the TDS exemption limit should be raised from 1,80,000 to 2,40,000 rupees. Not just this, the panel has also suggested a presumptive income scheme for professionals and small businesses where the presumptive tax can be levied on an annual turnover of 2 crores instead of the current 1 crores. The panel's first set of recommendations also suggests treating profits from sale or transfer of shares up to a holding period of 1 year as capital gains and not business income if the profits earned are up to 5 lakh rupees. The panel says the government must give this clarificatory relief to small taxpayers, mainly individuals, in the coming budget, as there is still confusion whether such profits are to be treated as capital gains or business income. There are lots of other procedural changes also which the panel has recommended, namely timely refunds with interest and hike in interest payments on delayed refunds, creating a separate column in tax returns where filers can show the computation of taxes, and making online filing of all direct tax returns as well as issuance of scrutiny notices and their responses. In New Delhi, Sapna Das.
Joining us now to discuss this further is Ketan Dalal, Regional Managing Partner, West of PwC India. Also with us, Ravi Gupta, member of the Easwar Panel. Gentlemen, appreciate you joining us. Mr. Gupta, let me start by asking you, you had about 2 months to put together your first batch of recommendations, about 33 recommendations that your panel has put forward for public comments over the next 7 days. May I ask you, sir, what the remit really was as far as this first batch was concerned? Was it simplification? Was it litigation or the ease of doing business? What has been the driver as far as this first batch of 33 recommendations is concerned?
See, now this, as you are aware, this panel was constituted with a mandate to make recommendations to the government on basically 3 accounts: on how we could simplify the existing tax laws, how we could avoid litigation, and how we could provide measures for ease of doing business. Now, this committee was constituted just about 2 months back, and within this span of 2 months, we had to give our first set of recommendations. So in that direction, we have attempted to give some measures which will be immediately required, which can be immediately implemented, and preferably which may be introduced in this very budget itself. So in that direction, we have made certain concrete suggestions to the government. For example, in case of TDS, we have given quite an elaborate set of recommendations, how the TDS provisions which are haunting the taxpayer every day, how we could resolve those. And second consequence, because of the TDS, is that there is a lot of grievance or account of refunds due to the SSCs. So we have tried to address these 2 situations and certain other concrete suggestions which I can discuss with you during the course of deliberations.
All right, let me bring Mr. Ketan Dalal in on this conversation as well. Mr. Dalal, as Mr. Gupta was pointing out, TDS seems to be one big highlight as far as the first batch of recommendations are concerned. The panel believes the rates are high, the process is cumbersome, the rate recommended will be reduced. 80% of individuals and HUF's average tax rate is 5% since many small taxpayers, so lower rates will avoid the need for refund and so on and so forth. Do you think that of the recommendations in the first batch, the approach to TDS would be the big highlight?
Well, I think there are several good recommendations, Shireen. I think I would like to divide the recommendations into 3 broad baskets. One is what I call the macro recommendations. Second is the substantive ones, and the third is the procedural ones. And some parts of the TDS would be in the procedural and some part in the substantive. But if I were to just spend a minute on the macro recommendations, I think the whole issue of deferring the income computation and disclosure standards is a very, very good recommendation. So is the recommendation which says that, look, Ind AS is coming. We do not know what the implications there are on the accounts and how the tax department should look at it. So status quo should be maintained. So even the fact of the need for maintaining status quo or deferring, to my mind, is a very important one. There is another one which sounds procedural, but I think is a very important macro recommendation, and that is the recommendation for e-governance in relation to dealing with the tax department and saying, look, emails is an adequate measure of communication with the tax department. So these are some of the macro ones, I would say. As you mentioned, you know, there are on TDS, there are on refunds, there are many others. And even on the substantive ones, you know, a thing like, you know, the ongoing controversy between capital gain and business income, the issue of disallowance on expenditure on income which is supposedly exempt, like dividend, but is economically not so because DDT is paid. Those are some of the other important ones, and of course we can talk about it as, you know, if there is time permitting during the course of this discussion.
Okay. Mr. Gupta, let me ask you, you know, some of the highlights that Mr. Dalal was also talking about, but what can we expect now as far as the second set of recommendations are concerned, and how soon should we be preparing ourselves for the second set of recommendations? You've been able to deliver the first set because these are immediate needs that perhaps will find their way into the budget in 2016, but when should we expect the second set of recommendations, and is that where you will then address the controversial issues of Section 9, for instance?
See, we have already started our deliberations on the second set also. We have gone through some of these contentious issues, mainly as you are mentioning Section 9 also. Some issues in international taxation also we have dealt with. But because these were contentious issues, required a lot of deliberation, therefore we deliberately put them into the second batch. Now, I think as soon as these recommendations have been put into the public domain, as soon as we finalize these, then we will be starting our work on the second batch, and I think within the next 2 to 2.5 months you should expect the second batch of recommendations, where we will definitely be touching upon Section 9 and certain other major international taxation issues.
Okay. Mr. Dalal, since the process of public consultation has started today now and we've got 7 days, let me get the two of you to actually engage in consultation right here on live television. You know, any contentious areas of the recommendations that have been put forward by the committee, anything that you would like changed, Mr. Dalal, from what you've seen so far?
You know, in most cases, whenever a report comes out, there is always, you know, X is contentious and Y is contentious. But I must say that this report is a very good report. I must compliment the committee, and I'm not saying just because Mr. Gupta is on the show. I was very happy to read it because, as Mr. Gupta said, it's just been 2 months and 10 days. I think the committee was appointed on 27th October. Within the limited time that was available, you know, picking up these low-hanging fruits, and I think it's a very good combination of the ease of doing business, aspects of the type that we mentioned, picking up, as I said, the macro points and the procedural points. And as Mr. Gupta said, the second batch of recommendations may perhaps take care of the more contentious issues. So while I cannot say that I've gone through every line, full stop and comma of the report, on a first reading, there is very little that I could do, except that maybe a couple of other things that may need to be picked up in addition to what you mentioned is, let's say, one of the things that complicates law a lot is, you know, too much of overlapping legislation. So, for example, you have domestic transfer pricing in the Companies Act, you have domestic transfer pricing in the Income Tax Act, that may need to be streamlined. And that, again, is a part of maybe batch number 2. Maybe we could look at something like group taxation to simplify the very complicated law when you have a large number of group companies which are, let's say, subsidiaries, which may be there for regulatory or commercial reasons, as in the case of infra companies, for example. So it's more a question of what could be dealt with as opposed to saying that there are too many contentious issues. Of course, one has to go through the fine print. But on the face of it, I think many of the recommendations are indeed extremely laudable. So, as I said, this is a very, very good report from that point of view.
Mr. Gupta, it's not very often that we actually have tax experts giving recommendations a thumbs up. So you're getting one right here on CNBC from Ketan Dalal. But let me ask you to comment very quickly on some of the suggestions that were made by Mr. Dalal, or clarifications on whether those issues will be dealt with. Go ahead, sir.
No, definitely. We are in fact inviting suggestions, and whatever Mr. Dalal has just mentioned, we will definitely take care of this. And this is already in the, this matter is before the committee, and I'm sure we will be able to do something about this. And as far as possible, we will try to resolve this issue of even multiple laws on various points. But see, the mandate of the committee is only with regard to tax laws. But we can definitely recommend that as to through the tax laws or through other allied laws, whatever is required, we will make that necessary recommendations to the government. And I think in the second batch, we will be able to deal with these contentious issues which Mr. Dalal is raising. And we definitely invite suggestions from all tax experts. Mr. Dalal is also very welcome to make his suggestions. And whatever he has suggested, I have noted those. I'll put it before the committee definitely.
Well, that's good to hear, sir. And let me end by asking you, Mr. Gupta, in about 10 or 20 seconds, in terms of the recommendations that you have made today, which would actually require amendments to the Income Tax Act itself, and which could be done by way of administrative changes?
See, in the report itself, madam, if you see, we have made the report into two parts. So there are about 20 recommendations that we have made which would require amendments in the Income Tax Act. Others could be through administrative instructions also. So those are administrative matters by board circulars, board notifications, etc. Those could be taken care of. But where amendment in the Act is required, that we want the government to do it immediately in this budget itself.
All right, Mr. Gupta and Mr. Dalal, we'll leave it there. Appreciate you joining us here on CNBC TV 18 to discuss the first set of recommendations that have been put forward to the government by the Justice Easwar Panel, and these recommendations are likely to be accepted by the government and incorporated into Budget 2016.